What's going on, guys? In this video, we're going to talk about the questions that you need to ask your hard money lender when you are going to get a loan for your fix and flip projects. Hey guys, my name is Sean, and on this channel, we go over real estate investing tips, strategies, and current events to help you learn more about the business and to help you become a real estate investing boss. As you guys might know, I am a hard money lender, and I take questions from you guys who come from my channel who are looking for a hard money loan for their fix and flip projects all the time. So all day, every day, my full-time job is to pick up calls from my best friends and offer them money for their fix and flip projects. So it's a very fulfilling job and definitely a lot of fun because I feel like Santa Claus, where I just give people money to fulfill their dreams. And from those calls, I've gotten a lot of similar questions. And of the questions they ask, some of them hit the top of the list where they are asking for exactly the right things that you should be asking for as a potential borrower. So without further ado, let's go into the list. So the first question that you should probably ask any lender is, what are your terms? Every lender is going to be a little bit different. Some of them will have different maximums on how much they can lend on a property. Most lenders these days are only lending up to 80% of the purchase price and potentially 80% of the construction costs. Some lenders may offer 100% of the purchase price, although those are really rare and usually cost a lot of money. Some lenders will allow you to cross-collateralize, which means that they will take equity in another property to use as a down payment for another property. So in this case, you would be able to get 100% financing, but you need to have another property associated with that loan. Some lenders just do a percentage of the ARV. So they don't care about what your purchase price is. They don't care what your construction cost is. They'll give you a loan based on the final value of the property. Again, those loans are going to be the most rare and also the most expensive. So honestly, if you're just getting into flipping, you should have in your mind that you should expect to put 10 to 20% as a down payment and have enough money for reserves to pay for your closing costs and your rehab costs, etc. So the next question that people should ask is, where can they lend? So not all lenders are equal on that front either. Some lenders will only lend in their super local niche market that they know really well. Some will lend across the entire state, and some lenders can lend across several different states. And of course, you have nationwide lenders who can lend in all 50 states. Each lender will also have their different preferences with what type of properties they will allow you to get a loan on. So most hard money lenders will only give you loans for single family properties or duplexes, triplexes, and fourplexes. Some hard money lenders can go up to 5plex, 6plex, 8, all the way up to multifamily at the 100 unit level. But those same companies may not do something like a mixed use commercial building. So something with a store on the bottom and 2 or 3 units on top. A lot of them right now, especially during COVID, have stopped giving loans on commercial properties. So let's say you have this amazing deal for a hotel building or a mall that's been closed down because of COVID. Well, it's going to be hard because most lenders will just not give you a loan for that specific property because they don't deal with that property type. And of course, almost no lender will give you a loan based on land. There are very few land lenders out there, so if you want to do the land game, usually you have to pay cash. Another question you got to ask is, what are their credit score requirements? Some hard money lenders have no credit score requirements. They just want to see if you have a good deal, and if they look at your character and they say, okay, you seem like a pretty good guy, I'll give you a loan anyway. Other lenders are more strict and they might have minimums like a 620 credit score or a 650 credit score. Some of them also have citizenship requirements. So if you're not a citizen, they can't give you a loan. Some of them want to see if you have at least a green card or a visa. In almost all cases, if you're an illegal immigrant, there's a good chance that they can't give you the loan. And I guess one way around that is to partner with someone who is a citizen and just have them sign all the docs in their name. Another question that you should ask your hard money lender is if they have prepayment penalties or a minimum loan duration. So it's often that hard money lenders want at least 3 or 4 months, which means that if you happen to finish your job faster and you sell your property, well, you're still on the hook for the rest of those 3 months or 4 months. You're paying for this loan even though you don't have the property anymore. There are definitely hard money lenders out there like ours who have no prepayment penalty, which means that you can buy a property and sell it for the very next day and no skin off our back, we don't care. And we even do transactional funding where you buy it with our loan and then you sell it at the very same closing table to another buyer. And because there's no prepayment penalty, you only have to pay for the fees, like the origination fees and processing and closing fees. But then we don't care. You just sell it and then you're off the loan. Now, of course, there's going to be different prepayment penalty structures depending on how long the loan's for. So if the loan's only for 12 months, then again, it's probably going to be just 3 or 4 months of prepayment penalty, maybe 0 if you work with the right lender, but that might change if the loan gets extended. So let's say you're asking for a 24-month loan or maybe even a 60-month loan, so like a 5-year bridge loan. Then in general, if they're going to reserve that much money for you for that long of a period, generally you will get better rates on those loans, but you are going to have a prepayment penalty, and that's usually going to be half of the duration of what you're asking for. So if you're asking for a 24-month loan because you're trying to buy a property, get everything entitled and everything with the city, get permits approved, and then sell the property, in your head you might think, this is going to take me over 12 months, maybe 18 months, so I want a 24-month loan. So we're going to have a 12-month prepayment penalty period where if you happen to sell that property within that 12 months, then you're going to be on the hook for the whole 12 months of interest. So there's a benefit to getting a longer term loan. Obviously, you don't have to refinance after a year is up, and you don't have to worry about your loan coming due, so you can take your time and work on your project. But if you have to work too fast, or you just get a slam dunk of a deal where someone wants to buy a property for you for much higher than you expected, then just realize that you have to pay that penalty up front. Another question that you should ask your lender is how they fund construction deals. So for the most part, most lenders will not just give you your construction funds on day one. So as an example, let's say you're buying a property for $1 million, you're asking for 80% of the purchase price, and you're also asking for an 80% construction loan, and your contractor gave you a budget of $100,000. So you're basically asking for $80,000 to help you pay for your rehab loan. For the most part, no lender is going to just give you $80,000 at closing for you to do whatever you want with it. They will usually pay you out through something called draws. So a good question to ask your lender is, how do they handle this draw process? Everyone does it a little bit differently. For us, we make you pay a little bit upfront for a feasibility study where we look at your scope of work and then we double check to make sure the numbers look legit. Your contractor isn't writing some crazy high or crazy low numbers. Then when you start your project, typically we have you pay for the first phase, and then when you're done with that first phase, you let us know. We send an inspector over, they take a look at the property, they take photos, and they report back to our team. Once we approve it, we release 80 cents on the dollar of what you spent so far. So basically it's a reimbursement process where you are going to be getting paid back $80,000 over the course of the loan. But again, every company is different, so definitely ask the question on how they handle their draw process. Now, of course, a big question to ask is how much they charge for their loans. What is their average rate? What are their typical fees, like origination fees? And do they have processing fees, like a desk fee or legal fee? It's very common for hard money lenders to charge around 10% for their note rate and possibly 1 or 2 points for the origination fee, plus around $1,500 or so for the processing fee. And if your property just happens to be in an attorney closed state, which means that they use attorneys instead of a title company like New York, Georgia, etc., then typically they charge you an additional $500 or so for the use of their in-house attorney. Another big question that you want to ask your hard money lender is how fast can they close? And if they ever had any problems performing at the last minute. Typically, hard money lenders should be able to close within 14 days. Some of them take longer, some of them are shorter. But in general, you want to make sure that your lender can close. Before you use a lender, be sure to ask your friends or ask any other people who have used that lender and ask them, hey, have you heard of anything happening with this company where they weren't able to perform at the last minute? Because it will really, really suck if you have had a loan all the way up to the last day where you're about to close on the property and then they pull the rug under you. That feeling feels super bad. You're gonna be at risk of losing your earnest money deposit, and you definitely don't wanna be in that situation. And then finally, another question you should ask your hard money lender is, what do you need to actually close on the deal? What kind of documentation do you need from the borrower? Typically, they're gonna need your identification, 2 months worth of bank statements to show that you have enough liquidity for the down payment, closing costs, rehab costs, and maybe 6 to 8 months of holding costs, so taxes, insurance, and interest payments. Basically, your hard money lender wants to make sure that you have enough money to successfully complete the deal and that you don't just run out of money midway through. They want to make sure you succeed so you can do more and more loans with them in the future. So these are all the questions that you should be asking a new hard money lender when you start working with them. And if you guys have any questions about the hard money lending process, or if you guys are looking for a hard money loan for your next fix and flip project, feel free to contact me. You can find my contact information down in the description below. You can schedule a call and we'll be happy to chat. And if you guys have enjoyed this video at all, please do me a huge favor and take 2 seconds to smash the like button to let YouTube and myself know that you guys like videos just like this one. And let me know if you think that I missed a key question that you guys should be asking your lenders, and leave a comment down in the comment section below. Thanks so much for watching, guys, and I'll see you next time. Take care.